$72 billion. That's how much Asia's online financial services market will be worth by 2020, up strongly from 2015's $4.7 billion. While China accounts for a big chunk of that, many experts say fast-growing Southeast Asia is the hotspot to watch. The first big growth area is people paying for things with their phone. You probably heard of ride-hailing rivals Grab and Gojek launching digital wallets. As well as paying for rides, users can pay in selected stores and restaurants with GrabPay and GoPay. That makes sense as a starting point because e-commerce accounts for less than 4% of total retail sales in Southeast Asia. GrabPay recently marked its expansion from Singapore into Malaysia by partnering with the state's largest bank, Maybank, allowing customers to use its wallet app within Maybank's network of retailers. And the spending doesn't stop here. GoPay and GrabPay both let users tap into their digital wallets to pay for online shopping and other online services. Lozada is in on the game too. Lozada Wallet, which doesn't require a credit or debit card to set up, allows people to top it up over the counter at a convenience store. Online financial services are another huge growth area for the region. Things like lending, money transfers, and insurance. An important factor is that of Southeast Asia's huge population, many are unbanked, meaning they lack access to traditional banks and services. This is where apps fill in the gaps. In Indonesia, for example, GoPay and a number of other apps target the 51% of folks without bank accounts by providing cash transfers. Meanwhile, a bank called Mandiri allows people to avoid having a bank account entirely, instead letting them link their e-wallet to a mobile phone number. The wallet is topped up at kiosks and stores around the country. You can even withdraw money from your e-wallet via a Mandiri ATM. Another booming category is peer-to-peer lending, in which the money doesn't come from financial institutions but from lenders like you and me. For Indonesia's Investtree, it works like this. A small business is waiting to be paid by a client, but that won't happen until the end of the month. So Investtree lenders immediately pay the business owner the invoice amount. Once the client payment comes through, the lender gets the money back, with an interest typically around 1.2% a month. Another fintech growth area is insurance. Driving the online insurance industry is the rise of AI and new technologies that make risk and loss assessments more accurate. In Singapore, for example, Bamboo is doing unemployment insurance. It does this by pooling people into groups of 1,000. Your insurance activates only when your pool reaches that number. When one person is laid off, the cost of the claims are shared with the entire group. Whatever isn't claimed goes back into your pocket. So when the economy is soaring, you pay less for insurance. Although titans like Grab and Alibaba spin-off Ant Financial are already growing their online finance empires across Southeast Asia, there's still plenty of space and consumer cash available to new startups.